Microphone check and screen share check, please. All right, good evening, guys. Ken at Tortoise Capital, Nightly Strategy Podcast, July 25th, 2022. We just finished a very good 90-minute session with the Creativity 202 course. The U.S. guys went tonight. The Eurozone went yesterday. We got about 3.5 hours total of really good crosstalk and dialogue and deep insights into the connection between creativity, planning, existential threats, risk and choice, preparation, systems thinking, and turtles. We had talked a lot about turtles. Still time to join that thing as a self-paced course and learn from the guys as we go. They'll tell you that get to some remarkable places. Luke's presentation tonight, his true storytelling was so good that I'm going to ask him to let me make that a standalone summary and make that available because I just thought it was excellent. And what I'd like you to do, Luke, is go through those videos on your sessions and pull your true stories out to make a narrative week by week as part of your coaching bundle so that you have sort of a documentary of the week by week lessons as you go, and I think you'll be interested in seeing the evolution of those insights as you go as part of a developmental process. I mean, you're crushing it with the trading. You're doing great work on the analytical every 50 trades, every 100 trades, and doing that. And now I'd like to see you do that with the synthesis, the so what of it, of how it feels holistically at the end of the day. I mean, that's actually one of the things you were talking about in today's lesson, and it made it very clear to me that that's something that we should be addressing. So once you get started on that project. So this was a quiz that we did last week, and it was part of the Creativity 202 experiential learning because it was such a good quiz that I wanted them to see practical hands-on implementation. And the idea behind this was that we had something that had gone through a bottoming process, some symbol. It had given us an SSC entry around the 28th of July, failure to fail, and then a breakout on a Kata 2 for the second entry, then a lucky gap up, a 3-day move to the top that rolled over, and when that went into the negative for the day, we sold half the position, and then the quiz was, where would you put your stop for the second half of a position? So if the first exit took care of the second entry, in other words, last in, first off, you're still holding the trade from this entry level and your price is at the red dot. What would you do? And the tactical response was to say, oh, what's the rule set for where do I place that stop? As if that was the central question. That really isn't the question. The real question was, what's your routine systematic procedure for making this decision? What is your recipe for cooking up a good exit? That's far more important than the particular solution you get to here. If you follow good process, then you're going to place that exit in a place that is consistent with who you are and the risks you want to take. So we talked about that in this week's lesson in Creativity 202. There's a poem that we're going to write that has the following phrase: the risks that you must take lead to the choices you must make. The risks you must take lead to the choices you must make. So a recipe for this process might be to simply answer the question, is there a risk that I have to take? Or is there a risk that I might want to take? Or that I should take? So how you answer the risk then helps you think about comparing that to the reward. And it turns out to be more important to have a routine recipe for making this decision routinely than the particular choice that you come up with. What I want to highlight is that after time passes, you end up getting this kind of posture. So the quiz happened at the end of this third bar in the blue box, that it was starting to fail, and we took half the position there, and then people were taking whatever exit they were. Well, the follow-on to this thing, the next 3 days basically gives back what the first 3 days gave us. And so you're still in the same position, but at the bottom of the stack. And what I want to highlight here is the importance of trade framing, and to say that the difference between all this price action through here and the price action that is up here is exactly this gap from between here and here, which leads back to this gap that when price broke out above that, it had already closed that gap and was starting to battle up into this where it kind of rejected, and this starting to roll over. Now it's still holding onto that top portion of that gap as support, but it wouldn't take much for that thing to fail back all the way to the PSAR. And so now the risk is, if I stick around too long, I'm really putting at risk any gains that I made when it crossed over that gap, which was the argument for getting out here or at the 2-day low or the 3-day low. The longer term folks were saying, well, I want to respect the PSAR, which at that time was down here, or the skin of the dragon, or the belly of the dragon, or the original PSAR, or the RL10. All of those is an argument. There's an argument to be made for all of those. But one of the things I just want to highlight here is the specific tactical lesson of why we frame visually and start trying to understand psychologically what these price movements mean. How are people interpreting price remaining above this gap, and then what would happen psychologically if that broke, coming down to the first place of possible optimistic support. And if that didn't help, if that didn't stop it, what do the PSARs represent? So to me, to echo Luke's comment from earlier today in the creativity course, is if there was one tattoo he could get, it would be trust the PSAR. So I'm not opposed to the PSAR, but just notice that since the day the PSAR, since the day of the quiz, on the day of the quiz, the PSAR was here, and it has since moved up to here. And so that's how much the world has changed since the quiz was written. So it actually turns, so each day that you're still in that trade, you're basically rerunning your recipe. So that's why I say it's important to have an efficient, satisfying recipe for how to manage those exit decisions rather than the particular one here, because you can't really answer this question unless you also place this trade and the amount of capital that's risked inside the larger context of your overall portfolio risk. How much of your portfolio does this represent? How much risk to the total portfolio does this open position represent? What is your time horizon? What's your risk tolerance? What are your objectives with the system that this is a part of? All of those things go into the recipe that is uniquely tailored to each trader. And that's why we can highlight the choices that you can make, like the exit now, or the 1-day low, or the 2-day low, or the 3-day low, or the edge of the gap, or the belly of the dragon, or the PSAR. All those are choices you could make. And if you are early in your process and planning properly, you're giving yourself more choices to consider. And then you can make the choice that allows you to take the risk that you've decided that you need to take. These were some of the follow-ups I made from this week's lesson as a consequence of listening to the dialogues. Things I need to study a little more is to revisit Robert Greene's book, 48 Laws of Power, Ching-Ning Chu's Thick Face Black Heart, for how to use a warrior philosophy of traditional China to conquer the challenges of business and life. Plato with the Googleplex is why a modern world still needs ancient philosophy, and then Spinoza, just to review my favorite philosopher, who helped us transition into the modern world. He was the gap move that allowed us to become modern. So that's a nice treatment of his work. The specifics of this week's lesson had to do with the existential threats and why that can cause us to act for revolutionary change or evolutionary change, how we might develop rules and systems for managing those risks. Lots of good work today that I'm not going to try to capture here, but the boys and girls are firing on all cylinders and really impressed with their commitment to digging deep into that courseware, and I think they would tell you it's been a positive experience. Onward. So here's today's market health check, and we're looking at a market that basically just held on today. It was an inside day, meaning that the high was lower than Friday's high, and or the high was lower than Friday's high, and the low was higher than Friday's low. So we've got that inside day happening. So it was a lower high and a higher low, so it's contained inside Friday. So there's no directional signal there. This is a wait and see attitude. And the nice thing is that when you have such a compressed range, then the amount of hesitation that there is before it starts making a decisive move out of this zero state is small. The fact that it couldn't power through and continue on back to the peak of the dragon and the peak of the RL10 is the reason why that the 3-period momentum is now facing down. It tipped ever so slightly to the downside. The support levels would be the 1-day low, the 2-day low, which is the top of the dragon, the spine of the dragon, the 5-day low and bottom of the dragon, PSAR, the belly of the RL10 and dragon, the belly here, the 10-day low, 30-day low, 150-day low, and the belly of the RL10. That's really the decisive support level. But we got quite a few firewalls here, if we can say it that way, that are places where it has held support in the past and given us some upward motion. So the feeling would be is these act as tripwires. If they break, then it increases the probability of the downward move. But if they hold and start to recover, we're not allowed to be surprised. The upside is easy to see if it breaks above today's high and then the 10-day high, which is also the 30-day high. It can get back up here to about 413 or 412 nicely. So that's a $12 move, and that's a 3% move. So the upside is pretty clear. So when you combine a strong upside potential and a strong downside potential with a narrow range, you have a compounded critical state ready to break large in either direction. So we'll be ready for that tomorrow. All right, let's take a look at the sectors. So the S&P was up just a fraction today at 0.12, and it was the dividing line between positive and negative on the day. Diamonds were slightly better at 0.28, emerging markets 0.36, the best performer, the Russell, at plus 1/2. Tech slightly lagged. There's the Qs at minus 0.57, and tech in the S&P 0.63. And then treasuries gave back about 1% to close just above 117. Let's take a look at the underperforming sectors first. ARC Genomics off 0.24, S&P Tech 0.63, the Aussie, the FANGs Consumer Discretionary 0.86, VXX and ARC Innovation 1.3, Blockchain and Wheat and Precious Metals 1.5 and 2, Bitcoin, Global Future of Finance, Ethereum, and the blended large cap crypto all between 3 and 5%. Individual companies that suffered: Coinbase 5.3, Robinhood 2.1, Tesla down 1.4, still above the key price level of 800, which could act as support for a nice bounce tomorrow. Rivian also gave back 1%. Apple, Microsoft, the tech bellwethers, underperforming the market and the broad index, but pretty much in line with the tech sector altogether. So kind of disappointing for those two, but it was not a runaway sell-off. This was kind of a holding pattern. People taking partial profits, I think, on tech. So if tech lagged, we had mostly everything else up. So let's take a look at those, if we will. So the outperformers was just about everything else. So there's the S&P at 0.12. You got real estate and marijuana up 0.24. Biotech, Mexico commercial real estate 0.34. Materials and staples 0.5. Lumber and finance 0.5 and 0.6. The other lumber, lithium, clean energy, agriculture, and blended commodities all the way up to from 0.8 to 1.8. Oil 2.27. Energy, Brazil, oil exploration was very strong today, 5.5. 4 and 3.5 for Brazil and energy. Individual companies, Cliff dominated at 6%, Devon Energy 5%. This was a day for the industrials. U.S. Steel 2.7, Alcoa 2.18, PayPal 0.7. So here's our three metals. Looking for more recovery on that tomorrow, especially when they are better than the materials. So the metals on average were much better than materials, but then materials were better than the S&P, so that's good, and that's why we might expect to see metals continue to work tomorrow. So we'll be ready for that. All right, next up is the daily report. Take a look at the sniper trade of the day. Today is in ARE once more. That's at Alexandria Real Estate. That's a healthcare real estate company that started off as a Godzilla pattern a month ago and has just been giving us really smooth intraday moves all day with very long trends and based on the PSAR. So trust that PSAR, as Luke would say. Nice long trends makes it a really nice intraday trader. We're using a standard risk box, the R10, was equal to 50 cents, half a dollar. Here was the open. It broke above the dragon here, and we had a rising PSAR. The RL10 reversed and rolled up. So when it moved one standard risk box, this risk box is equal to that risk box. It moved one risk box off the bottom, had cleared this. We went ahead, held our nose, and bought it. It rolled up. The rising PSAR takes us out. So we cash that win against that much risk. So about a 0.4. The upward trend continues. A brief moment in time where it reverses. Now we have a kata 2. There's a support, a higher low. It hits the PSAR flip. Here's my standard risk box. I'm going to execute off the belly of the RL10, so I'm really only risking this much. It moves smartly up, creates a little consolidation, and then as it falls through the dragon, I just take it there instead of waiting for the the PSAR flip. Because this was up pretty strong, I wasn't interested in the immediate short, which we could have had here with the PSAR flip box and a standard risk like that. I waited to see that little RL10 shake and bake. So short here, standard risk box to here. I would execute off the PSAR, so again, I'm only risking about that much. So this would be a 1.0 loss if it broke here. So that would be about a minus 0.7. If this reversed and broke out here, I'd be losing minus 0.7. It didn't do that. Here's another little RL10 shimmy. But it came back and hit. So I take that exit and make this gain against that risk, which is about a 0.4. It rolls over, hits the PSAR, and then fails again, so I play this as a collapsing dragon. Standard risk box. I would use the top of the RL10 as my exit, so I'm only risking that much. It makes a nice move. I take the PSAR exit, so we capture this much off of that much risk. So that's about a 1.2 gain. So pretty good set of trades in ARE. It moves in a very orderly fashion, continues to do that, so I'll continue to trade it as long as it keeps behaving well like this. Healthcare real estate that started in a Godzilla and has just been improving and becoming more civilized as we go. Dashboard number 1. We moved into bearish quiet. So volatility beginning to dry up. So it was bearish normal for a long time. We are now into bearish quiet. The rarest condition of all. It's a slowly healing market. Now we're still getting plenty of early warnings about potential dead cat bounces here, because we remember that we're still well under the 200-day moving average. But the risk Z is favorable, and the declining volatility is making us feel a little more confident about the upside trade. Things like Chevron, ExxonMobil in the energy sector were strong. Caterpillar, 3M in the industrials, and then the Dow 30. Still weakness here in Travelers, Merck, American Express, IBM, and Verizon. Lots of dojis today. Not a surprise when you saw how small a range the S&P was today, and had quite a few warnings about dead cat bounces. IBM 9.6 to 1 on the auto framer. That'll get your attention. 4.5 on Johnson and Johnson and Merck, 3-1 on Pfizer and Travelers. So you can see that XLV is very interesting in Johnson and Johnson, Merck, and Pfizer. So we'd expect XLV to be interesting right now. Out of the whole stack of the Dow, the only breakout was on a 10-day breakout for Chevron, which was up 2.8 today. So that could be a sign of more good things to come. It's already above its 10-day high. Its previous 10-day high, I should say. Yeah, XLV was not quite good enough. Only up 0.2. It couldn't compete with metals and mining, oil exploration. Brazil and Latin America were strong today, along with energy. That's the story of the day. Tech was lagging. Lots of warnings for dead cat bounces, and only silver tests out on the auto framer, but lots of dojis is the main point. Today was a consolidation and a wait-and-see day, looking to see where the early leadership starts tomorrow, and then see if the momentum players pile on in either direction. To me, the default position is down because it's bearish quiet, but I'm aware that the upside is also a strong possibility in bear quiet. The absence of volatility strengthens the upside case. Handful of reward to risks that are better than 2-1 on the auto framer. IBM, Johnson & Johnson, Merck, Travelers, and Pfizer, those are the ones that really stand out to me. This is all your mechanical framing data. What would be your mechanical entry tomorrow, the mechanical risk, and then the 10-day high is your initial target, the 10-day high, which you see is like right there. That's how you read that chart. Lots of squeezes today. That's not a surprise. And I noticed that among our usual suspects, you get the Dow, the S&P, and Tesla all high on the stack of tightly compressed squeezes. So that's actually a good sign for the upside. When you have those things tightly compressed, like this, and they're in a zero state, any breakout tends to magnify, just like on a very quiet day. Even a small stone will make a big splash relatively. So I like Tesla, the S&P, and the Dow for tomorrow. Getting into the Godzilla, the sniper setups. Just a few Godzillas here. Newmont Mining. This is an enraged Godzilla. 3.88 Z-score on the 5-day and a 6 sigma move on the 1-day. So you would see Newmont as an extraordinary move. Let's go see what a 6 sigma move looks like. So I'm going to shift to the S&P. Clear the drawings. Find Newmont. Yep, that's what that looks like. This is one of the reasons you like to frame trades on violations of the previous day's low. So if this was yesterday's low right here in this decaying, weakening sector, and then you have a gap down and it fails off and drops like a rock, that's an 11% move from 50 to 44. That's minus $6 on 50. That's like almost 12%. What's that look like intraday? An S&P 500 company that is just getting crushed. Yeah, that's what it looks like on 1 minute. And on the 3 minute, you can see that's a clearly tradable early. And you want to talk about an orderly seller. The R10 on Newmont Mining is 34 cents. And here's a 34-cent risk box. It's about that big. So technically, if that breaks, the way you run that is if it breaks the OR3, that little, it's now starting, it breaks out of this opening range 5, the OR3. When that breaks down below that, you just take this box, get short here, and put that standard risk box on it like this, and then you get that whole move. And probably exiting around here, and probably re-enter down here. So not a bad way to start the day. That's going to be in play tomorrow as well. Yeah. So what I'll do tomorrow on this one is put a nice tight wrist box around this like that, be in a zero state and say, I wonder which way it's going to go. So if it breaks above, call it 45. I'll be long at 45 with about that much risk. But if it starts failing immediately, you want to be short because of reasons. But this recovery could get to here, 46. And then the next support level is probably halfway down this stack. So we'd say Fibonacci-wise, probably around 48. Closing the gap to here, or the high of the day was about here. And then, so you have 1, 2, 3, 4 big steps up it could take. And the path of least resistance is down. So that's why I'm going to frame the upside, be ready for it, but ready to pile on to the downside if it continues to fail. That's going to be a prime target for tomorrow. So the things that I look for on these snipers is what is the condition of the short-term volatility. These price indexes tell me trade location based on 150 days, 30 days, and 10 days. So where in the stack is it between 0.0 and 1.0? So halfway in the middle of that trading range would be 0.5. So Newmont Mining, obviously a Godzilla because it's smashed near the bottom on all 3 dimensions, and then an enormous 5-day volatility and a 1-day volatility. So that's why that's going to be prime time tomorrow. In the fireworks, so these are ones where the weekly and the daily are at the top of the stack. And these are all quietly recuperating from the fireworks. So you had this boom of fireworks and then a 5-day tight range and a tight 1-day range. So you could get the next leg up, but this could also start decaying and fall back to the ground. So we're looking for it to break out of that 5-day range and then ready to trade that. The fence sitters, again, are the ones that are if the top of the trading range is at 1.0 and the bottom of the trading range is at 0.0, these are ones that are stuck right in the middle on the fence line between 0.4 and 0.6 with a tightly compressed range on the 5-day and in this case with the 1-day. So when they break out, an ordinary move just to support or resistance gives you a large R multiple just by trading inside that trading band. So it's the fact that it is exactly in the middle and tightly compressed is what gives you the possibility of that strong breakout. That's a sneaky, stealthy trade. There's Clorox, Conagra. Those are all pretty good. The S&P most quiet based on the 5-day, and the most volatile also based on the 5-day. There's your Newmont Mining. It's the #1 volatile stock in HCA. SIVB, I don't know what they are, but those are compelling for the same reason, just not of the same magnitude. Whereas Verizon and AT&T have had enormously vigorous 5-day moves, but very, very quiet on 1 day. So that may tell you that it is compressed into a doji and then ready to reverse or to continue, whatever caused that explosive move. So that's how you read that. Starting tomorrow, we're going to add another. We're going to add the ETFs into this report to looking at the 200 most liquid ETFs. We've expanded the database to include them, so we'll start adding in even more choices for your favorite patterns, all tradables. This is our standard tactical trading set on the right hand side with all of the sniper stats over here sorted by the 5-day volatility declining. GDLC is interesting because of the sharp 1-day move, but just notice how most of those were all quiet given the quiet move of the market. So again, the market really drives most of these. And so it's not surprising to see how quiet they were today. Multi-time frame NDX. Your strength is showing again in the energy sector, and there's Devon, ExxonMobil, and Chevron. There's your energy, XLE. And oil exploration, XOP. So not surprising that when the sectors are outperforming, the key companies are also outperforming. So we want to keep an eye on those. Potential turnaround here in Merck and Pfizer and Procter and Gamble. So that whole healthcare is showing a little bit of juice right now. And conversely, the things that really stand out from failure, that's why the anomaly matters, is McDonald's, Bitcoin Trust, and Ethereum as part of the whole crypto complex. Blockchain and silver also suffering. Silver much more so than gold. But this is part of the argument for the price collapse in Newmont Mining. There's people bailing on that thing left and right. So today was that first little hesitation in here, giving us that compounded critical state. What's it going to do? Is it going to resume, or is it going to collapse? I don't know. But the slope of the RL30 is starting to roll over at more than 1 sigma away from average, so that's danger. First warning sign, yellow alert. All right, that's everything I want to look at from the report. Let's shift to sniper trades. And we've already seen this one in ARE. So as it unfolded was the gap up and standard risk box off the low, typical exit, COTA 2 re-entry, standard exit, waited for the COTA 2 to the downside for the short, standard exit, COTA 2 to the downside, standard exit, just about picture perfect. Very, very orderly. That's exactly what you want. It's like taking sheep to be sheared routinely, or harvesting corn. That's all it is. All right, this is Devon Energy from the opening on 5-minute charts on the simplified Yahoo Finance. I want you to notice the what I did here was take a look at the 5-day, or the opening range 5 was this. So I'm waiting to see this thing either break out this way or break down that way. The breakout to the upside happened. That's your standard risk box in Devon Energy, about 50 cents. Orderly move. I take the PSAR exit in the usual way. There's your PSAR. Crosses the dragon here. When that breaks, it breaks. So that's 1 unit of risk, 2 units of reward. So that's about a 2R. Caught a 2 reentry, micro gain, failure to follow through, and then I was done with that one. This is Cliffs Natural Resources. I'm looking at the OR3 on this one. When the new second bar opens and starts to roll up, I go ahead and take that entry with a standard risk box. Pays off smartly. PSAR exit. One unit of risk. 1, 2, 3. And just again the standard PSAR exit. Missed the short. Span of control issue, but when this RL10 doesn't rebound and recover and just starts failing right away, I should have been on that one, smashing that short. I mean, this was a legitimate short side shot too with the PSAR flip, but I liked the strength of that so much that I was really looking to see this break through here so I could get long again. Instead, it broke, and then I was not mentally prepared for that one. Caught a 2. I was prepared for that one. Standard risk. About half an hour. Caught a 2. About a scratch. Missed the short. Missed the short. Was so disgusted with myself for missing standard entries that just didn't want to chase. The Qs, 5-minute chart, dollar standard risk. Waiting to see the PSAR break. There it is. Again, what I was waiting to see was this PSAR break. So it holds like a double bottom and then breaks the PSAR. So there's my standard risk. Hoping for that. Scratch, micro loss. Caught a 2 reentry, because now what we have is a low, a low, a higher low, PSAR break, standard risk. Let's go. Nothing. I said, all right, 2 nothings and micro losses. So I have a high, a low, so a lower high. This feels now like a PSAR flip. Caught a 2, standard risk. And wanted to get paid, so probably netted a scratch for that, for all that work. Part of the problem of a low volatility day in the big indexes. Next up, VXX. So this was the closure on Friday. Was a big harsh sell-off into the close, and then it opens here, And I'm noticing the PSAR decay right here, tracking the north skin of the dragon. Standard risk on this is 25 cents. It breaks out from a low and moves that standard risk box off the bottom, so it crosses the dragon, breaks the PSAR. Just buy it. Let's go. Kind of a grinding 2R right there. 1 unit of risk. 1, 2. Not the kind of runaway move I was hoping for, but what are you going to do? Caught a 2. Low. Higher low. Entry on the PSAR break. Standard risk. And fractional. So there was not a lot of VIX play today. This was not a panic selling day. This was just kind of a quiet grind and no reason to buy kind of a day. All right, this is Brazil on the 3-minute. I see this is where the RL10 rolls over, crosses the dragon here, hits the PSAR there, so I'm short with a standard risk box. Quick scratch. It was a little slow on the exit on that one. This looks more like a Kata 2 because you have the RL10 and then the higher low. So the fact that you have that plus a PSAR flip, I feel really good about that one. You could put your exit here or here for execution. There's no sense letting this thing fail all the way through a -1. So you could get out here at about -0.5 or -0.6 and minimize your risk that way. Grinding, Kata 2, scratching, Kata 2. That one pays. And standard exit. So 2 nothings and a something. That's about 1R. May have given back too much on that, but it was better than the S&P. So I stuck with it a little longer. Remember, the S&P was kind of in a doji today, didn't do much. So about 1R in Brazil. Last one was, this is oil and gas exploration. Energy was very strong all day. It started with this opening, then sold off harshly here. So that's the OR3. This thing rolled off, and I got a 1, 2, 3, and it was already halfway back up the stack. And I said, you know what? I'm not going to wait for it to break out above that. I'm just going to take it right here with a standard risk. And we tapped into the runaway train on that one. That was such a strong move. I said, well, let's try to see if the other side's there. Quick stop and reverse for a scratch. Kata 2 for a scratch, and it felt like that was done. That energy got quickly repriced in here to a level of contentment, and there just wasn't much more in that for the rest of the day. All right, so those were the sniper trades of the day. Let's take a look at the traders. Here's Tim. He gets out of that one with a gain. He was helping someone with his homework, so he missed the trade that he wanted. I like this reversal to the upside. Quick exit, gets paid on the short. We gave back a lot there, but that probably happened pretty fast, so he does get paid. Got really choppy here. Can't do much about that. Then decided to wait a minute, and then of course that's when it pays off. Couple quick 3 scratches, no harm, no foul. He gets the short. This one is the trade that made the difference today. There just wasn't much room in the S&P on such a narrowly focused day. Again, you got to find the movers. One of the challenges is finding when you're only trading one symbol like this case it was the crude. If that's not moving, then you're stuck. If you look at the way I'm trying to trade with, 10 or 15 symbols to choose from and then find the mover, what I'm trying to do is constantly find the one that's already in play and moving to find out right away if it's going to work or not. So find the movers. Here's Jack is back from family vacation time. And there just wasn't much for him in Tesla early. Here's the breakdown. He waits to see like the second break. It rebounds, so he gets paid a little bit. He waits for the PSAR flip. He didn't chase, but he did take this one, and then it failed immediately, so he gets out. Then gets a little gun shy. We could have been here. He does take this one, though, and gets paid. That's not an unreasonable give back. I think your short could either be here or here. So a little slow on the uptake, and then 1, 2, 3 would be about right here instead of there. So we might have gotten a little more out of there. There just wasn't a whole lot to get in that window. However, he crushes it on Devon. So he likes trading this set of symbols that are uncorrelated, and in different sectors. So he gets a shot at finding the movers, has a little wider range of potential targets, which I think is very good practice. Now, here was so this is Devon. And you'll recall when I did this one, I saw this sell off back to support, and then I took like a 1, 2, 3, and I got my fill right about here. There was no real advantage of that until really this whole thing gets cleared. He patiently waits for the emerging dragon and crushes it. He plays this one. He sees that little hesitation, barely moves the needle at all. Like it almost is flat, and then continues to go. So he buys the new high of the day and then gets paid really nicely for 4.2 and makes a perfect exit all out. He had more. I just think he had other things going on, but that's pretty good. 4.2. Welcome back. Here's Les with the euro dollar on the threes. Short gets paid, waits for the breakout, quick scratch. I think on this one you could get short right here, and then you'd get paid that whole thing, and we'd have made the extra bank in here. So that's one. We might have gotten 2. Good scratch, and then that failure to fail. Notice the kata 2, a low, a higher low. When this one fails to fail and resumes, especially right about here where spring turns to summer, you got to nail that one, and then you would probably get this one, and then this one, and then this one. So each of those legs is a tradable moment, and that 1.3 might have been 4. But if you're not in the zero state, not ready to do it, but just learn how to get there and start tracking that pattern. This is Jack on Alcoa, crushing it again. So this is the gap up opening, so it closed here, gaps up to here, continues to go, so he says, why not? It runs all the way up, and as it's coming back down, he says, well, let me get something. That'll pay for all of the commissions for today. He waits for the collapsing dragon, crushes it, gets a little bit, resumes. It doesn't work, so he stops, reverses, crushes it for 1.7. Well done. Gold star. Luke on the 5-minute Aussie. He talked today in his little session about the efficacy and goodness of getting your 2. And I'll say, yeah, okay, but I also want to get that. Gets paid nicely. Now when he's here, he's got 0.5, 2.4, and 0.8. So now he's at 3.7. And now on that early one, he now feels like this is a day that we can make some hay. He does some quick ventures and recoveries. Scratch. Now he's back on the winning track. And right about here, he's feeling like, well, maybe that's just going to stay locked in. Like it's below this zero line. But I want you to notice, if you go listen to our discussion from this weekend, from last night, we talked about why this inner yellow zone, the land of choppiness, but if it could break above these, now you had reasons to really get going. And notice, when it does finally break through that little energy barrier, that thing goes. So let's pay attention to the prep work. And even that one probably pays off. We got to go see what that looks like over here. Yeah, not so much. But the first one for sure. But still, 2.9 and well done. Woj 1.5 is up around 1,700 trades. 2.9 gets it done. And then there just wasn't much happening. He kind of quickly gets out and says, enough is enough. 1.5, nice work. And his last one, Devon and Tesla. On these waiting for a breakout, that might have been the breakout there. Still, you got the reasonable move. There's a COTA 2, which would pay. And just wasn't much happening anywhere in here. Tesla should go right away. When it fails to go right away, maybe that's the kind of day it's going to be. That was the most surprising non-move of the day. All right, so I'm going to make a couple portions of the presentations from today from the Creativity 202 extract. I thought mine were generally useful to a wide audience, so I'm going to make a special package of the one that Luke did and that I did. I think they fit together pretty nice as a gift to the team for your consideration for Creativity 202. Really nice work by the team today. All right, that's everything I got for you guys. Take good care, and we shall see you tomorrow.